Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for July 23rd going into the 24th. We're going to start off with the natural gas. The maintain gap higher on Friday will leave a medium bullish reversal below that'll warrant a higher trade for days/weeks. The trade below 331.40 brought in 491 ticks of pressure. We also had levels to be short below at 319.30, 312.30. Those are off hold now. And the trade above 285.50 brought in strength up to 299.10. And then the trade above 293.10 also warned of strength up here, but we've now failed back below that line, which now warns of decent pressure again. Let me just double check that real quick. Yeah. A maintain gap lower tomorrow will also leave a minor bearish reversal above. Okay, and the crude just keeps trucking higher. The break above 67.91 warned of strength. We saw $22.98 coming into today, and more than that, up to 93.50. On July 7th, we left a minor bullish reversal below. That was here. We've seen the strength from that, and then on the 8th, I said we left a medium bullish reversal below that warned of higher trade for days/weeks. We'd seen 1706 coming into today from the 73.83 open and have rallied also up to 93.50. So from here, we've seen a nice run up. The maintain gap lower on Friday will leave a minor bearish reversal above. Just on the day here, the sell-off from the highs warns of possible pressure down into the gap before/if resuming higher trade. And we're already starting to see some of that now. Decent failure below this formation here, which is going to come in at 90.14. Plus 5.4 per hour starting at 6 o'clock p.m. That'll warrant decent pressure for 500 ticks. And then in the RBOB, the break above 287.06 warned a decent strength. We'd seen 61.39 cents of that coming into today, and some more of that up to 336. In here, we also, and then the break above 295.75 was also a bullish suggestion. Then on July 6th, we left a medium bullish reversal below that I said warned a higher trade in general for days/weeks. We'd attained 50.92 of that coming into today. And then more up into the highs. That was from the 7.6 open, and we've seen this now for a couple weeks. Okay, in the heating oil, the maintain gap lower. Tomorrow we'll leave a minor bearish reversal above. The way that this went out warns of some pressure overnight, possibly down into that gap before/if resuming higher trade. Trade above 320.04 had brought in $1.07.28 coming in today, and a little bit more than that up to 428.88. And in the Augie contract up to 438.07 as most of these started in the Augie contract and now rolled over into the SEP. And then in the SEP, the trade above 376.05 has brought in the strength up to 428.88. Decent failure below this formation right here, which is going to come in at 415.37 plus 32 per hour starting at 6 o'clock p.m. will warrant decent pressure. It's a pretty steep line to lean against, but nonetheless, there you have it. And we're looking for 15 cents minimum to the downside. If we break below there decently and back up through it decently, look for decent short covering to come in. And in the Brent, the maintained gap lower tomorrow with even minor bearish reversal above, but that would be more effective if/when we take out 95 even in the process. This also warrants a pressure overnight before/if resuming higher trade. We came to shy of exhaustion at 70.14, and we've rallied up to 102. And the maintained gap higher on the 7th, left a minor bullish reversal below, and then on the 8th, we left a medium bullish reversal below. We detained, from the medium one, we detained $22 coming from the 77.44 open, and then from the 72.79 open also, and we've seen trade up to 102. Decent trade below 93.17 plus 9 per hour starting at 6 o'clock p.m., 8 o'clock p.m., excuse me, will warrant decent pressure. We've taken out this possible exhaustion level here. The next possible exhaustion is up at 107.40. The gas oil maintained gap lower tomorrow. We'll leave a minor bearish reversal above. That also warrants a possible pressure before/if resuming higher trade. The trade above 896.59 brought in 367.41 into today, and more than that up to 1295.50 in the Augie contract. And a number of other bullish calls in here. In the Augie contract, a decent break below 1216.68. Plus 64 per hour starting at 8 o'clock p.m. will warrant decent pressure. Further break below 1193.81 plus 106 per hour will warrant a decent pressure as well. And going into tomorrow, the RBOB is the weakest of the three. The heating oil, the strongest of the three, and the crude oil in the middle relative to one another in strength. I would also note that the RBOB crack left a medium bearish reversal above. That warrants a pressure for days/weeks. If we leave a maintained gap higher in there tomorrow, then I'll leave a minor bullish reversal below that would negate that medium bearish reversal above and likely bring in a run for these highs again. The maintained gap higher tomorrow in the RBOB to heat would leave a minor bullish reversal below. That would be more effective if/when we take out 84.32 in the process. If we take out negative 97.79 by any amount, that'll suggest that this general structure still has longevity to the downside. Okay, thank you for watching, and I'll see you in tomorrow's podcast.